Good morning, everyone, and welcome to the webinar on navigating COVID-19 and post-pandemic scenarios for Mexico. My name is Maciel Núñez, and I'm the Senior Manager from Client Services at Docker Frontier. We're joining you today from the cities of Miami and from Washington, D.C. Before we get started, I realize that some of you might potentially be new to Docker Frontier, so I thought I would take 2 minutes to provide you with a very quick overview of our firm and how we work with executives and major multinationals. Docker Frontier is a global market intelligence and consulting firm that provides tailored solutions to drive growth for clients across the B2B, healthcare, consumer, and technology sectors. Our dedicated teams serve as advisors to clients, delivering the market and industry knowledge they need to succeed at all points of the business cycle. We have found that continuous research and insights, custom solutions, and transaction support services provide clients with timely, actionable insights and adapt to win in changing markets. Our company is headquartered in Washington, D.C. However, it has offices in Detroit, New York, London, Paris, Berlin, Singapore, Shanghai, and Bangalore. If after this session at any time you would like to learn more information about us, please visit our website at dockerfrontier.com. So with that very brief overview, it is now my pleasure to introduce you to our presenter, Alejandro Valerio. Alejandro is a research analyst for Mexico. He wrote the scenarios you will see today during this session. Alejandro?
Good morning, Maciel. Thank you so much for having me. And good morning to everyone on the line. We hope that you're actually safe alongside your family.
Thank you, Alejandro. So let's get started. First, I think it will be helpful to talk a little bit about the structure of the webinar. So it will consist of a 45-minute moderated discussion where we will be covering the topics you can see in your screen right now. This will be followed by a Q&A session. If you have any questions or points of clarification anytime throughout the discussion regarding any of the topics that we will be covering today, please send them to us. You can do so via the Q&A box, which you will find on the right-hand side of your screen. And we will do our best to ensure that these questions are addressed during the Q&A period. Throughout the discussion, we will be engaging with you through polling questions, which you will be able to answer through your phone. Alejandro will now explain how you can answer these questions.
Thank you, Maciel. Indeed, we're going to be doing some live polling, which is going to help us to tailor and to put in a larger picture the content of our presentation. So here in this slide, you can see what you can do. You can go to your browser and type this address in the name field. You can put B2C if you belong to a B2C company, industrials, IT, other industry, or if you're not part of any company, you can put no company. When you click next, all the questions, there are 5 polling questions that we're going to be doing throughout the presentation, and they're going to be uploaded automatically once you click next from the following question. Let me give a minute here to make sure that everybody actually log in the polling system. Okay, I think we almost set. And I would like to start with the first question that for those of you on the line, we would like you to answer, which is actually, how do you see Mexico in terms of revenues? Specifically, by how much do you estimate COVID-19 will impact your revenues this year in Mexico? Okay. Another 15 seconds. And what we see that here, okay, still moving. the large majority answering that it's going to be impacting by between more than 11 to 20%. They're going to fall short in terms of the revenue target for 2020. Okay. The next question I would like you to answer is, over the next 3 years, and this is actually thinking about the mid-term and the long term, how do you see Mexico? Will Mexico struggle to recover more or less than other major countries in Latin America? Let's give another 30 seconds here. Okay, overall, definitely Mexico will struggle a lot based on the answer of our friends on the line.
Yeah, thank you, Alejandro. Very interesting indeed to see how these new market conditions have highly impacted our clients in Mexico. So this is a great set to get started. I would like to start the conversation by really understanding what is the framework that you use to understand and analyze what is the impact of COVID-19 crisis in Mexico's outlook.
That's a really good question, Maciel. And this is what we did, me and my colleagues in the Latin America research team. So we took the 3 key variables that actually are impacting all the countries, and particularly in Latin America, in terms of the COVID-19 and the impact on the economy. And as you can see here, it's 3 buckets. The first one, it's actually related to the social distancing measures that have been taken across the board in Latin America. Secondly, in terms of the fiscal response, how government actually helping to mitigate the devastating economic effects of COVID-19 during social distancing measures and after these measures actually being lifted. And thirdly, it's about the timing of treatment and the vaccine. Although we are not epidemiologists, it's important to have a view about the time frame when an effective treatment or a vaccine might be available to curtail COVID-19. So I'm going to be explaining each of one of them, starting with the first part about social distancing measures. The first thing that we did was actually adapting this framework created by Thomas Puello. Probably most of you already read this paper, or if you haven't, it would be great that you read that, The Hammer and the Dance, which actually provides a framework about what governments and countries can do to mitigate the effect of COVID-19. And you can see here, basically, that all the countries are going to be adapting what he calls the dance. And the dance is actually about what measures you do to mitigate the effect of COVID-19, and particularly about keeping the R number below 1, about affecting proper testing, contact tracing, quarantine, and isolating, having good public education in terms of hygiene and social distancing, bar large gatherings, and tighten up social distancing measures when needed. And of course, apply a highest cost benefit social distancing measures. So most of the countries, that's the way they're going to do to curtail. And you can see here, it's some sort of a dance. Like you get a spike of the cases, but then you start flattening the curve. But we didn't stay only in this framework. What we actually did, we adopted in a more nuanced way for Latin America. And we came out with what we call the bachata, slow dance, which in many ways, what it reflects, it's less effective in terms of how you curtail the COVID-19 cases, or if you are more effective, or what we call the samba fast dance. And that means that you actually more proactive in terms of social distancing measures. And let me put them with more granularity here. What we call good dancing skills is what you see here in these 4 items. The first one is actually, if you have cases, how you react from the beginning. Early reactions And by that, we mean do you close border soon enough to avoid actually cases coming from abroad? What kind of social distancing measures you took from the beginning to avoid, like, person-to-person cases or spread among the community? And how that actually translates in terms of actually our framework for bachata or samba. So in bachata, it would mean that you actually slowly reacted when you see a rapid spike of cases coming up. Or in samba, it's like if you have a rapid reaction and you keep cases under control. And if you want to put it in terms of a country, I think the best example would be the case of South Korea or Singapore. In terms of the second item, good information, and that has to do with the 3 T, testing, tracing, and testing again. So testing in terms of actually to identify and isolate cases, tracing that you need to make sure that the cases that you actually track to avoid and to see how many people might have been exposed, and then testing again, and that would be in terms of the antibodies to make sure that you know at what time or what is the right timing to actually lift off social distancing measures. The third one, it's actually about healthcare infrastructure and resources, and that has to do with ICUs, unit, to make sure that you have the right infrastructure in terms of healthcare to reduce morbidity. And the last one, it's about the endorsement from local authorities. And that has to do about how you actually been communicating the social distancing measures, but most importantly about how actually your population is addressing to the measures that the government is actually enacting to make sure to curtail COVID-19 cases. This is actually better reflected when we put it vis-a-vis the cases. Look at the case of Mexico. That Mexico is going to be most likely within the likely bachata dancers. And even though you see, for example, in the case of Peru, that is showing more death per million, it is important to bear in mind that the number of Mexico at this point might be low in this graph because of the lack of testing. And as you saw that in the previous slide, that's a key item to include or to qualify countries within the bachata or within the samba framework. As is today, Mexico has over 36,000 cases and over 3,500 deaths. But if we put that in terms of cases, testing, Mexico has 0.4 testing per 1,000 population. That's the lowest number among the OECD countries, and only above Guatemala and Haiti across Latin America. So way below other countries that have been more effective curtailing COVID-19 cases, like the case of Costa Rica, or the case of Chile, or the case of Colombia. Furthermore, when you actually put it in terms of vis-a-vis other larger markets in Latin America, and here you can see in this matrix what kind of measures have been taken, all these countries across the board, to curtail COVID-19 cases. For example, Mexico, which is actually quite remarkable, is the only country that hasn't completely shut down all its airports. And only the border between the US and Mexico has been reduced to a minimum, and that was actually a bilateral agreement. But even the mandatory health emergency that it was declared by the government, when you go into the weeds, you can see that that the closure of public parks or churches or discretionary retail, it was not as mandatory like it was in the case of Colombia, Argentina, Chile, or Peru. But that doesn't mean necessarily that actually the population has been follow up what the government has been enacting. And this is actually a good benchmark to track. For example, in terms of mobility, you can see Mexico has decreased since January of this year. And it's interesting in these graphs since mid-March, and that was actually when the state of Mexico and Mexico City actually took more drastic social distancing measures than the federal government, that activity is starting to decrease. When the federal government actually declared a public health emergency was at the end of March. But before that, already the population was taking measure by its own hand and started actually reducing its mobility. So with that, I explained the part about social distancing measure, and I would like to go to the second item of our framework, which is actually about the fiscal response. And here you can see across Latin America that not all the government have the same fiscal capacity to mitigate the devastating effects of COVID-19. Mexico just recently actually was downgraded in terms of its investment rating. And that has to do because of the fact that the government remained fit and not actually putting a fiscal policy on the table. On the same hand, all the damaging that the collapse of the oil price has been doing to PEMEX and the risk for public finance, that it downgraded the Mexico credit rating. Mexico, it's I would say that in a worse position vis-a-vis, like in the case of Chile and Peru, that they have put forward a strong fiscal policy response to mitigate the effects. And here actually is more eloquent to see that. For example, in this column, you can take a look about what Mexico has been doing. And for example, on the monetary front, Banxico has been quite aggressive, cutting the policy rate. And right now it's below 6%. On the contrary, the federal government, led by President Andrés Manuel López Obrador, has actually taken not so much aggressive measure, such as, for example, just expanding the social programs that he already has, providing some credits to help the informal workers, but not something robust like we have seen that put forward, for example, by the government of Chile or the government of Peru. So when we put together both sides of the equation, on one hand, what the governments are doing in terms of curtailing COVID-19 cases, or how they're doing in terms of dancing skills, and then on the y-axis, what you see here, what are actually the fiscal responses that the government are enacting. You can see in the case of Mexico, the likely scenarios, they don't look quite promising. Most likely, Mexico will be a wider U-shaped recovery. And that has to do because the fiscal policy would be less than 5% of GDP. And Mexico so far hasn't been quite effective in terms of social distancing measures, and most importantly about testing and tracing cases. Thus, it's not going to be, based on what we see that so far, as effective as it should be in terms of actually limiting the spread of COVID-19 cases. So putting both together, you get the wider U, the most likely scenario. The upside, or the best likely scenario, would be a normal U-shaped recovery, or the worst likely scenario, which it would be L-shaped, and that would be the worst of the worst, which it would be a spike of cases of COVID-19 and a lack of strong fiscal response. And the third item about the framework, it's about the batching and the timing. You can see here in this column, the normal process for a batching to be created and to be put in the public. It takes between 5 to 10 years. And so far, of all the candidates of the batching that have been put forward in terms of the COVID-19, only one is at this phase. And in our scenarios, what we see that our base case, it's if an effective treatment it's actually available, it would be by the last quarter of 2020. And in terms of access for the vaccine, we're talking about the last quarter of 2021. And it is important here to make emphasis of what we call moderate access. And moderate access would be that only 25% of the population and the critically sick patients will have access to this treatment or to this vaccine if we put it together by the end of this year or the end of 2021. And that has to do because of the lack of capacity to ramp up production in Latin American labs.
Thank you, Alejandro. This is all very interesting, and thank you for using the hammer and the dance to put things in perspective. So what we can see is that COVID-19 has been a game changer for Latin America, and particularly in Mexico, which I think something that we can all agree on is that Mexico already had a very unique set of challenges before the pandemic. So help us to better understand so that we can have that more clarity in the pre-post-COVID. How was Mexico doing before COVID-19? And how has the pandemic impacted the economic drivers of Mexico's economy?
Thank you, Maciel. Those are really two important questions, because by knowing where the countries were before the COVID-19 start hitting, we will know or have more clarity where they're heading to. And you can see here to the first part of your question about that Mexico was already in a really weak position. This is actually GDP quarterly over quarter, looking actually on a year-over-year base, and you can see the number that they were actually they came out recently in Q1. It was already the worst contraction since the Great Recession in 2009. And just to put in perspective, usually the first year of every sexenio, it's actually about low growth because there is a learning curve, there is a reshuffling of government spending. But last year was particularly hard for Mexico, and that has to do by the erratic policies that were put forward by the López Obrador administration. And how that actually translates in terms of actually the view for the economic drivers. Here you can see our view before COVID-19, and you can tell that actually for 2020 was a mixed reading, that we were expecting weak growth, around 0.4% of GDP growth in 2020, driven mainly by the strong US economy and then also by a weak domestic demand. And here's actually to your second question, Maciel, about the impact of COVID-19, that all the drivers actually took a negative turn. With the exception, of course, of the monetary policy, and that it's led by the Federal Reserve that went back to the monetary policy tools that he enacted in 2009, and that give more space for Banxico to actually reduce its policy rate. But besides that, all the drivers actually pointed in the negative direction. And I would like to explain that by breaking it in two parts. The first one, I'm going to walk you through about the external growth factors, and then I will go through the internal growth factors. So the first thing that is important to bear in mind, it's about the US economy. And this is a key point, that Mexico is not the Mexico of 1982. It's not the Mexico of 1994, 1995, that Mexico went through really bad recessions, when Mexico was actually an inward economy. Mexico relies heavily on the US market. Thus, what happened in the US, it will definitely have an impact on the Mexican economy. And right now, we're actually forecasting for the US a contraction minus 5.5. And that's in spite of all the fiscal policy and all the monetary policy response that we see that in the US. And we're expecting by 2022 that the economy is going to be recovered to the pre-COVID-19 level. So the point is how that actually is going to translate and how that's going to impact a Mexican economy. So the first thing has to do with the exports. More than 85% of the exports, of Mexican exports and goods, they go to the US markets. You can see in the last year, since 2015, that it has a really good positive trajectory based on the PEMEX about in the manufacturing sector. But since the COVID-19, we have seen that how that number have completely plunged. And right now we see that the number in terms of the Mexico PEMEX, it's actually lower than where it was back in 2009. And that has to do because this crisis, it's definitely unprecedented. It has had devastating effect across the board, and particularly on the key Mexico manufacturing sector. Another point that is important to bear in mind, and this actually relates particularly to the government economic policy, has to do with the oil prices and the situation in PEMEX. Everybody who pays attention to the Mexico economy and its government knows that the energy sector is one of the keystone of President López Obrador economic policy. And he actually set and fits to revamp PEMEX production despite of what's happening worldwide. We have seen that a shock on the supply and of the demand side, coupled with the situation in PEMEX that, as you can see in this graph, has been decreasing in terms of production. Since the sexenio of Vicente Fox, production was around 3.4 million barrels per day, and last year end of 1.7, and only the government has been able to stabilize the production, not to ramp up to what is the government aim to, was expecting to end this year around 2 million barrels per day. But the situation is even worse. You can see here, this is actually our forecast for in terms of the oil prices that has completely and dramatically changed, and they are now quite weak vis-a-vis of what it used to be our forecast at the beginning of the year. And in terms of the Mexican mezcla, we actually forecasting right now that is going to be on average around 28 this year in 2020. And that has to do because of the shock on the supply and on the demand side. PEMEX, besides that, has serious structural problems. It's the most indebted oil company in the world with a debt over 105 billion. Production is going to decline starting now in May in light of the OPEC Plus agreement. And even though the government remains fit and all the government reshuffling that it has done in terms of budget and government spending aim to put more money in this company, is not going to be profitable. And that's one of the reasons why also Mexico was downgraded in terms of its credit rating a few weeks ago. Another driver that it is important has to do with the remittances. And you can see here the unprecedented and devastating effects of the COVID-19 basically wipe out all the jobs that were created in the US since the Great Recession back in 2009. We're talking about unemployment more than 14% at this point. On average, around 4 million jobs were lost since mid-March, when the economic mayhem or financial carnage actually began in the US. And that actually has a major and will have a major impact on Mexico remittances, as you can see here in this chart. Some of you probably saw the headline on Mexico newspaper recently and saw that a spike on remittance flow, that it actually went up around 35% year on year in March. But I wouldn't be so confident on that number, because when you analyze the underlying drivers on remittance flows, actually they're being more related to the US economic cycle, to the US labor market dynamic, and then of course to the migration policy. And when we see that now unemployment in April that actually hit around 15%, most likely what you are expected to see in Mexico is a decline by at least 35% in April and May, and most likely in June, until the US market start to recover. If we use as a proxy what happened back in October of 2009, when unemployment hiked to 10% in the US. That also will have a major impact on the tourist sector in Mexico, that started the year already quite weak, as you can see here. But when the decline of the US labor market, the other key markets for the tourist sector in Mexico are actually Europe and Canada. They're also quite feeble at this point. We should be expecting a major decline in the tourist sector to around this dimension that you see here back in 2009. And that has to do because the limitation in terms of world traveling, and then also about how weak the labor markets are across the top markets for Mexico tourist sector. So I'm going to go through now the internal growth factors. And the first one that is important to bear in mind is actually what's happening with the investment. And investment was already quite rocky in the first year of the government of López Obrador. And that has to do with the regulatory uncertainty affecting key sectors, the banking sector, the energy sector, and the construction sector for that matter. And here, it's a good proxy that shows the situation across the board in Mexico. The decline of gross fixed investment in the construction sector was dramatically back in 2019, and it completely plunged started in January of this year. The construction sector actually has an impact around 185 businesses of the 235 that are actually INEGI, the statistics agency in Mexico, taking count. What we should be expecting that investment is probably going to have the worst year in Mexico, probably recorded in the last 50 years. And that has to do because the latest blow with the whole situation of COVID-19 was about the latest public consultation that stopped the construction of the brewery of Constellation Brands in Mexicali last March. That was a brewery that is worth around 1.4 billion, and it was shut down using the same method that it shut down the new airport back in November of 2018, where you can see that where investment start completely to plunge in Mexico. The situation with investment, the confrontation between the government of López Obrador and the private sector has led to the decline of business sentiment. And it's not, I doubt that it's going to be recovering this year because the situation has become more dire. And we don't see that actually that the government is going to change course in terms of the fiscal policy. That it's already starting reflecting. This is actually about the business confidence index in the construction, manufacturing, and commerce sector in March, and you can see that it's already around the same levels that it was back in 2009 at the lowest of the Great Recession that affected the Mexican economy back of that year. The whole economic meltdown that we see that in Mexico, it's already taking a toll on AMLO's popularity, although it is important to bear in mind that he remains in a good position. In fact, in light of the support by his base, this is actually about the level of popularity across the board in Latin America and the top countries. And you can see in the case of López Obrador that where he was in July of 2019 and where he is right now, around 49%, that has to do because of the economic situation start making a pinch on his approval rating. But how that actually is going to affect the political dynamic in Mexico, that's a key point to bear in mind. Probably most of you already read, it's been on the headline in the last weeks, the proposal enacted by President López Obrador to change the budget legislation, which it will give him or grant him more power to circumvent the Congress. And that actually raised the alarm that he was aiming to have more power and more sway on the budget moving forward 2021. And that actually has to be put in the larger context. And we need to think about the sexenio of López Obrador by phases. And next year is going to be a critical point of his sexenio because that's when the renewal of the Chamber of Deputies is going to happen. And in light of the current situation, it is likely that Morena might lose actually the control of the Chamber of Deputies. So López Obrador he would like to actually to speed up key legislative pieces between now and 2021, thinking that he won't have the majority he has at this point that allows him to put forward legislation or at least try to change key legislation like the one he already tried to do about the budget. Also, it is important that he has received some pushback within Morena, like the case of Ricardo Monreal, who is the head of the Senate. And that has to be think in the context of starting 2021, the battle for the succession of within Morena and thinking about the election of 2024 is going to begin. We will see how the chips are actually going to fall. But definitely within Morena, there might be some pushback against López Obrador, thinking ahead that in 2024, he's not going to be in the ballot. If the opposition is smart, they will try to keep AMLO out of the ballot in 2021 in terms of the recall referendum for to put his mandate on the ballot. And they will focus more on actually on the battle of the Chamber of Deputies within the context of the economic crisis.
Interesting, Alejandro, very interesting. Seems that our clients will have to deal with unprecedented levels of uncertainty over the coming months. So immediately what comes to mind after listening to you is how these shifting macroeconomic variables have changed the outlook for Mexico so much. And hence something that I'm asking myself now, and I'm sure that everyone who's joining us today is also asking the same thing to themselves, because it's a top of mind question, is basically when should companies expect a recovery in Mexico?
Those are key and really good question, Maciel. And the best way we can put it, the first point, it's actually that all Latin America is going to be a recession. As you saw that the economic effects of COVID-19 is going to affect everyone across the board. and it's going to have an impact on all the countries. In the case of Mexico, we expecting a contraction of 9.5 in 2020 and 5.2% rebound in 2021, which I'm going to explain why it's actually 5.2 in terms of a statistical rebound. But we're expecting a rebound this year in Q3, and that will be across the board. Here in this index, you can see me and my colleagues prepare for all the Latin markets. The wider U that I was pointed out about Mexico, the Q2 is going to be the worst quarter of the year, and then we're going to start seeing a recovery starting in Q3. I would like to pass it along to our friends on the line if they align with this view, and to answer this question: when they see, or when do you expect sales to start to pick up in Mexico? I will give 30 seconds. Okay. I'm glad to see that 4% already at some point in Q2. Good. So that gives us a good point of reference to move forward. And this graph will explain what we think about the recovery of Mexico. We need to think about, have the big picture clear for Mexico moving forward. I mean, the economic effect of COVID-19 are going to be pretty bad. In the blue line, you can see our previous forecast, pre-COVID-19. And you can see in 2020, we were expecting only a meager growth of 0.4%. With the devastation of the COVID-19 and the impact on the external demand of Mexico and then on the domestic demand, we're expecting a contraction of 9.5%. And then you see that a 5.2% recovery in 2021. But that's a statistical rebound. When you see here on the y-axis actually is the value of the GDP. Not until 2023, the Mexican economy is going to be actually where it was at the end of 2019. And that has to do by the structural damages that are going to be created because of the crisis. We should be expecting bankruptcy that is going to reduce the investment. Employment recovery is going to be slow. And just to put it in perspective, between March 15 until April 7, more than 350,000 jobs were wiped out in Mexico. That's actually more than the 345,000 jobs that were created throughout the whole 2019. You saw already the confidence index in terms of the business side, but then also data on consumer sentiment too is going to remain really low, and it's going to take a while to pick up. In terms of the fiscal response, so far, nothing signaled that the President López Obrador is going to put forward a strong fiscal policy to mitigate the effects. And then we also expect a U-shaped recovery in terms of the external demand, particularly about the US economy, what you saw that a few slides ago. So overall, when you compare Mexico with the other countries in Latin America, you can see here that Mexico is going to be back what it used to be in 2019. In 2023, in terms of GDP, it's going to be the country that is going to take longer to recover compared with the case of Peru and Chile, because these countries, on the contrary of Mexico, they have been more effective and more proactive in terms of one, social distancing, aggressive testing and tracing of COVID-19 cases. And secondly, in terms of actually putting a robust fiscal response to mitigate the devastating effects of COVID-19. Putting together everything that I mentioned before about the economic drivers, here you have our scenarios for Mexico within the COVID-19 crisis. So our most likely scenario, as I pointed out before, is a wider U recovery. We're expecting a contraction of -9.5%, and then a recovery of 5.2%. bearing in mind what I explained before, this is a statistical ribbon, and that Mexico is going to be back to where it was in 2019 in 2023. And the key variables that you have to bear in mind, it's actually that Mexico is not going to be that effective, or at least that's actually what has been proved so far in terms of curtailing the COVID-19 cases. In terms of economic stimulus, Mexico has been the worst country across Latin America, and definitely across the OECD nations. And in terms of actually treatment and vaccine, and this actually applies to all the countries worldwide, we're not expecting an effective treatment by the end of this year and a vaccine, if there is one available, until the end of 2021. So another key variables that you have to bear in mind is the U-shaped recovery. And in the case of Mexico, it's particularly relevant for the US, that the US economy is going to start recovering in Q3, but it's going to be a slow recovery to like basically all the countries. And then, of course, in terms of the oil prices, that it's going to be weak oil prices. The collapse of oil prices and the shock on the supply and the demand side is going to keep prices low, and that's really important in light of President López Obrador's fixation to revamp PEMEX, but revamp production without putting together a sustainable plan in terms of actually reducing the debt to mitigate the losses. And for this, it's important to remember that PEMEX just in Q1 of this year lost more than $23 billion. That's actually more losses than what it lost in 2019 in terms of revenues. And then on the domestic side of variables to bear in mind, we were actually forecasting that PEMEX were going to lose the investment grade at the beginning of this year, like most of our clients read in our first Mexico QMR. In terms of the midterm elections, we should be expecting Morena to lose the control of the deputy chamber because of the economic effect and the toll that it's going to take on AMLO's popularity between now and next year elections. And in terms of economic policy, AMLO has been actually juggling between pragmatic and populist policies. On one hand, you get a president that actually ramp up or wants to ramp up production on PEMEX, but on the other hand, he was actually the main driver ratifying the USMCA. Mexico was the first one to ratify, and that actually good news for Mexico moving forward. And then what the government's actually expecting to create 2 million jobs or to help to revamp the economy, the infrastructure plan, which is actually a plan that is worth more than $42 billion between now and the end of the sexenio. And it was supposed to start at the beginning of this year, and the government is actually expecting to start it right now. We're not expecting that plan to start, and it would be slowly implemented until the end of this year in light of the current situation of the COVID-19 in Mexico. So that's the most likely scenario. So the worst scenario would be that you get an L-shaped recovery, and that would be a contraction of -12 this year, and then structural damages moving forward throughout the sexennium. And that would be the case of if you get a large, secondary outbreaks of cases, and then on the other hand, without no fiscal response whatsoever from the government. And of course, in terms of actually that if Mexico loses its credit rating investment grade really soon, and there is a bigger polarization after the election of this next year that actually propel AMLO to a showdown with the opposition that affect business sentiment. And on the other hand, that the government then in a desperate act try to leave growth by engaging on unsustainable fiscal policy. And that would be to take the public debt level to unsustainable levels. And of course, if it fails miserably in terms of the implementation of the infrastructure plan. And the best scenario at this point, it would be if the government actually ramp up its testing capacity, and on the other hand, that it changes mind on the fiscal policy front.
Thank you, Alejandro. This is very interesting. Thank you for walking us through these scenarios, and which actually leads me to my last questions of the day. So What do you think companies can do amid this situation? And what are some of the long-term opportunities that could stem from this crisis?
That's a good point, Maciel. I know that I have painted a bleak picture, but of course, there is always opportunity, and we need to continue to be looking for them. And here, just some food for thought that I would like to leave you. I'm thinking about the short-term, mid-term, and then also long-term actions that you can take. The first one would be, companies should be protecting their employees, should make sure that actually they remain focused on that this crisis, like all the crises that humanity have been going through, is going to pass. So it's to make sure that you have that, the human capital, that you come out stronger of the crisis. Then another point would be that make sure that you align within the organization and to keep the eye on the ball in terms of supply chain disruption, to make sure that you continue to operate in this actually distressed time. Also, it will be important to continue to engage the government, despite the current rift between the government and the private sector in Mexico. Engagement and government engagement has to be a priority for all the companies across the board. And of course, since we are in uncharted waters in terms of a scenario planning, companies have to have a scenario planning put in place, thinking, outside the box, and make sure that they have a strong alignment within their teams and across, the local, regional, and corporate teams. Another key actions that we need to bear in mind for Mexico, which is particularly relevant, in light that the government it's unlikely to put a strong fiscal response and to not spend any tax measures or tax credits in favor of companies. At least at this point, López Obrador hasn't mentioned or hasn't signaled that he's going to move in that direction. I think it's really important for all the companies to protect their cash in terms of the OPEX and then also in terms of the CAPEX. Most of the companies that were already thinking that way for this year, in light of how 2019 was a rough year in economic and then also in business terms in Mexico. But this year, since the crisis is expected to be more acute, that's a key actions that companies should definitely take, which is actually protect their cash flow. And it would be good to hear from the line, where has your company concentrated the most as it pertains to protecting cash so far? Okay. Okay, I think that gives us a good picture about what companies are doing to protect their cash. And then also to the second point of your question, Maciel, about the opportunities moving forward within this crisis. So this is the way we see them. There will be opportunities within these three buckets about the government flagship programs and then USMCA related industries, about the digital transformation that is being taking place as we speak, and then of course about how you can be shaping the post-pandemic new normal. The first point about the opportunities, the government of López Obrador, what he did in terms of the fiscal response is just basically reshuffling the budget, and it's going to continue to the investment of the plans that they were already aligned in the 2020 budget. Thus, we should be spending, in terms of the government spending agenda, investment on these states on energy and infrastructure, like the Dos Bocas oil refinery taking place in Tabasco. We already start seeing the GDP in Tabasco is growing since 2019, and it's going to continue because that project is going to go and it's going to move forward because it's a top priority for the López Obrador administration. Secondly, new investment related to the USMCA. Within these bad news that we've been reading about COVID-19, in March, Canada approved the USMCA, and it was the last country that actually passed it, joining the US and Mexico, which approved it a year ago in the case of Mexico, and in the US at the end of 2019. Investment was supposed to pick up in these areas of Mexico, in these manufacturing states, by the middle of this year. Unfortunately, because of the COVID-19, those investments are going to be put on hold. But we actually expecting that investment are going to pick up again on these states moving forward. And in terms of social transfers, I mean, López Obrador has been protecting the social programs, and government spending in terms of social transfers is going to remain on these states moving along throughout the sexenio. So asking, this is the last poll of the webinar, I would like to know where do you see the biggest opportunity for your company, Mexico, over the next 3 years stemming from government policy? Well, see, large majority are not quite optimistic about the opportunities created by the government. Okay, so in terms of the digital side, it is important that all the companies actually start adopting the digital transformation. E-commerce is going to become really important for Mexico moving forward, and I would like to leave you with this data that more than 80% of restaurants right now at this point in Mexico actually being closed. 30,000 already shut down for good, and that's because they don't have capacity in terms of digital platform. We're going to see that ramp up in terms of the digital transformation, and it's something that is already start seeing in Mexico. As you can see in this poll that we held in 2018, that 31% of our clients across the board in the IT, B2C, and B2B sector see that a rapid growth in terms of e-commerce in their sector. Lastly, what I was pointed out, even though of the rift between the government and the private sector at this point, and it looks like the bridges have been burned, particularly from the side of the government, it is important that companies continue to remain engaged with the government, with the academia, the civil society, and to put themselves as an ally of the recovery of Mexico that is still remain attractive when we look the big picture in the midterm and the long term. And finally, to achieve that end, to make sure that companies actually are stronger by the end of this crisis and come out in a better position, we definitely advocated for a strong alignment. And that goes a strong alignment and execution and planning in terms of actually how you do it corporate, region, and country level. You all have to be in the same page that it's not going to be an easy path, but it's going to recover, it's going to look brighter. And in order to get there, you have to be aligned at the internal level.
Thank you, Alejandro. Thank you for sharing this interesting and very relevant information with all of us today. Now, what I would love to do is to hear from everyone that has joined us today by opening the floor for questions. So if you haven't done so already, please remember that if you have any questions, you can send them to the GoToMeeting Messenger, which you can find on the right-hand side of your screen. So Alejandro, I think we might be able to start answering some of those questions that we have received already.
Sure. Yeah, we're receiving interesting question. One I would like to take now, it's about, do you think AMLO will change course in terms of fiscal policy? I don't think so. I don't see that at this point. President López Obrador, he has had many opportunities to put forward fiscal policy response like President Vizcarra did in Peru, or President Piñera did in Chile, although he hasn't agreed to do that. And we need to think about the larger picture about Mexico. For AMLO to put forward a strong fiscal response that looks like the FOBA-PROA program that he was enacted in the 90s to rescue the banking sector after the tequila crisis in 1994. That said, if President López Obrador is aiming to change course, Mexico has leeway to do so because the public debt level as percentage of the GDP allows the country to do so. Plus, having a strong institutional framework like the autonomy of Banxico as well, it would be a good tandem to have a strong monetary policy and a fiscal policy. But for that, it would be a change of action by the López Obrador administration. Another question that I'm receiving here, it's about, can I give us more insights about the exchange rates and what to expect on volatility? Sure. We have seen the peso actually depreciating more than 25% since January of this year. Like any other currency in emerging markets, the peso is not immune of what's happening worldwide in terms of COVID-19. But it is important to bear in mind that the peso fundamentals, they remain strong. And by that, I mean, what Banxico can do, the autonomy of Banxico, the level of reserve of Mexico, which is actually more than $180 billion, the fact that we're expecting a recovery in the US starting in Q3, that will help the external account of Mexico, and that will help with the remittance flow. And just to put it in perspective, the remittance flow last year were $36 billion. That actually more than the $33 billion that the economy received in terms of FDI. And just to give you a more nuanced view, Mexico, for example, when it was downgraded PEMEX, the credit rating, the first statement that was issued by the Minister of Hacienda, by Arturo Herrera, was actually about how the government respect Banxico and it respect its autonomy. That actually was a signal to markets and investors that despite of the fiscal policy and the priorities of the government, the autonomy of the central bank is going to be respected. That's going to maintain Mexico, attractiveness vis-a-vis other markets, and it shouldn't cause more volatility. Of course, I would say the biggest risk for the FX besides the COVID-19, it's actually the energy policy of the government. So that's something that we should be paying attention. More volatility to come, but we shouldn't be expecting that the peso, we should be expecting that the peso actually gain its value moving forward in Q3. And the last question that actually I will take.
Thank you, Alejandro. I think we have for only one more.
Yes, that's actually what counterweights and resources are available to stop the bleeding until the next year election in Mexico. In terms of counterweights and resources, I put it like in the context of the actions to take. Strategic planning, it's important. Protect your cash flow, it's the other one. And make sure that you have your supply chain view quite aligned within corporate, regional, and local, because disruption still might be down the road affecting production in Mexico. That's good.
Thank you, Alejandro. So looks like we're going coming up close to the top of the hour. So do you have any final remarks before we conclude today's webinar?
But just briefly, even though Mexico, it looks dire, the picture this year, Mexico, because of the resiliency of the economy and how diversified it is, it remains attractive, and the USMCA is good news for multinationals. So looking ahead and the big picture, Mexico will still remain a key market to pay attention across emerging markets worldwide.
Thank you, Alejandro. So for those on the line, if you submitted any questions that we were not able to answer on the line today, we will follow up with responses to each of those questions through your client services manager within the next 24 hours. So we will be able to answer those for you. Well, again, thank you everyone for joining us today. I hope this was insightful, and we look forward to speaking with you again soon. Have a great day.
Thank you, Maciel.
Bye.